Chris Preston.
I'm Brett Simmerman.
Welcome to Street Check, the best two-person podcast in the history of Cabot Wealth Network, which has been delivering investment advice for 55 years and counting. Welcome back, Brad. We were off last week for the fourth. Brad is coming to us from 2010 Skype meeting. A little bit choppy on his end, but I think that the audio should be good. Brad, what did you do for the fourth?
Absolutely nothing.
Great.
Kids' birthday weekends dominate this time of year, so it's kid stuff, not fourth stuff. And the dog, I mean, like the dog doesn't do well with fireworks. Gets the
Oh
nerves
yeah.
going, gets the anxiety. So it's
Yep.
not really a thing. Plus, in Arizona, you can't launch stuff into the sky. So if you get fireworks, it's just the stuff that sits on the ground and sprays sparks, which
Really?
is reasonable. Well, yeah, I mean, it's a desert. Everything's dehydrated and easy to set on fire.
I mean, like just
So
regular citizens can't do that, but the trained
yes,
professionals can do fireworks. Okay.
most of the time, yeah, but they will sometimes cancel even the professional shows because of fire risk. So pretty lackluster. What about yourself?
Yeah, we were on vacation, and uh, yeah, fourth. Yeah, we didn't go to fireworks or anything. You can see them. You can see them sort of along we were a beach area. You can see them along the coast and like several different towns in Connecticut from where we were. But yeah, I don't know. Lots of beach time, lots of good meals. My wife and my anniversary was last week, so yeah, it's good. But nothing too eventful. Um,
How long have how long have you been married?
18 years.
Oof,
Yeah,
oof.
our marriage can now uh smoke and
Buy
vote.
cigarettes.
Yeah, buy
Yeah.
cigarettes and vote. Um, okay. Let's lots to catch up on since it's been a couple weeks. So let's get to what we're going to talk about today.
Tariffs are back, baby. We're going to talk about tariffs, markets at all-time highs despite them. Bitcoin also at all-time highs, sort of, which I will clarify when we talk about that. And then after that, we are going to each make three predictions for the back half of the year. But before we get to that, Chris, welcome back from vacation. It is your week to defend hottest take you could think of this week. Earnings season, more foe than friend. You have 90 seconds and you may begin.
Yeah, so earnings season, Q1 earnings season came at a perfect time. It was right after the market had cratered after Liberation Day in early April, and the market needed a bit of good news. Now, of course, part of the turnaround, or a big part of the turnaround, was the 90-day pause. That was the biggest. But then what sort of fueled a more extended turnaround in the back half of April and all of May was earnings season. Now, it was a really good earnings season. I think expectations were that it'd be S&P would have average growth of like 7-8%, and ended up being about 14%. So it was not only that's like the second double digit percentage gain in the last 4 years or something like that. This time, expectations it's different. Expectations are lower, 5% growth for the S&P average S&P company, and the market does not need a lifeboat this time, life raft this time. It is at all-time highs, as we'll discuss, and I think we're going to see a little bit more effective tariffs this time around. Granted, there were not 90-day pause almost across the board, but I think certain things are going to be more baked in. We hear about see news stories about how tariffs are actually impacting certain companies. So I think we'll see that. I don't think we'll see double-digit percentage gain this time around, and I think stocks will feel the disappointments more than get a benefit from the beats this time around.
All right, time. Yeah, it'll be interesting to see. I mean, it like the tariff thing has just been a sort of Damocles. Or at least it's been projected as like a sword of Damocles hanging over heads. Um, but it keeps getting kicked down the road and we keep getting delays. And there's, labor market is strong-ish, but everybody is sort of in a holding pattern. So anytime you get these rubber meets the road environments where it's like, okay, well, we'll see what the actual numbers say. Um, yeah, I like the take. Uh, Good, not great, not as good as last quarter, but
Yeah.
yeah, we'll have.
Yeah. And yeah, I do think just the big difference is that investors can almost only be disappointed this time around, not only, but are more likely to be disappointed because everything's priced for perfection, essentially. Um, Whereas last time I was looking for any bit of good news and it got it. But I also, just don't think that we're going to get 14% growth this time around. Could be like half that, maybe. Um, okay, let's get to the market and tariffs. So tariffs, as you mentioned, are back. Let's see, 35% or worse is being threatened on Canada. Vietnam thought they had a deal of the 10 to 15% range, but apparently it's more like 20%. Brazil is threatening 50% tariffs for political reasons because they're what
For
are you calling a witch hunt on Bolsonaro. I don't quite understand,
Yeah, and
nor do we need to dive into that, but 50% I think is the number, right?
it is 50%. Brazil also one of the countries we have a trade surplus with, so it's sort of, I'll say, gives away the game, right? It's not really about trade deficits and
Yeah.
surpluses. It's a tool.
Yeah.
Uh,
So, we've been pointing to July July 9th, which was the deadline for the 90-day, very loose deadline, the 90-day pause. And while there've been a handful of deals, not even, UK, what was the one, the Southeast Asian country that struck a deal last week? Was it Thailand? No,
I don't know. Um,
it was one. But anyway, there's been very, very few deals have been announced. What's been announced is that, some of these threats of higher tariffs, maybe not as high as initially threatened, but 35% on Canada is a big deal. 50% on Brazil seems both unnecessary and that's pretty high. Um, the market again though hasn't imploded. I think just the market, as we discussed, just isn't taking tariffs literally or seriously the way it was in April. That fear factor is not gone away, but isn't nearly what it was before. And as a result, you have a market that, coming into today at least, was at all-time highs.
yeah, one of the interesting things, just thinking about it now, copper rallied significantly on the threats of a 50% copper tariff, just a couple of days ago. I think that should raise the fear level a little bit, that assets and companies are responding positively to the threat of tariffs and totally disregarding any potential negative outcome, right? Like, presumably, if we are looking at the threat of tariffs as a boy who cried wolf scenario, and it's like, hey, they're coming, we promise they're
Right.
coming, we should be baking that in both directions, right? Like, the threat of tariffs should be as unlikely as any kind of upside payoff from tariffs.
Right.
So it's asymmetric the way that it seems to be getting priced in.
You mean
Um,
upside payoff from tariff deals actually being struck? Is that what you mean?
no, so like the price of copper rallying on the threat of tariff, right? Like,
Oh,
if those tariffs never take effect, the price of copper shouldn't go anywhere.
right.
Um, right. So it's like we sort of want to have our cake and eat it too, and take the upside and just pretend the downside's not happening. Um, that sets up I think an asymmetric risk reward where the market is sort of picking and choosing what it wants to take seriously when it comes to the tariff threats, which I think raises the risk of people getting caught off sides. I mean, like, the ultimate issue is going to be, do these tariffs ever bite? Are these ever actually implemented?
Right.
Because if they are, then I think we get closer to what we had in April, right now, I mean, like the sort of half glass half full take is, well, the market is forward looking, and the glass half empty take is the market is being myopic about it.
Yeah.
But like it, I don't know. It's just going to keep getting kicked. The can's going to keep getting kicked down the road until it's not, I guess. Um, I don't know. I mean, like we're 6 months into this administration at this point. Are we going to be dealing with the threat of tariffs for 4 years? I can't imagine that it is, it's either it's either got to be taken entirely off the table or they have to be implemented at some point. And I am concerned about when that at some point arrives.
Yeah, and I'd be surprised if it goes much beyond this calendar year, which is going to tie into one of my predictions later. But um, in part because, like you said, you can only kick the can down the road so long, and I just think Trump will get bored with them at a certain point. And just both sides will be like tired of being threatened with this, and or on our side that I'm tired of the back and forth on this. Let's strike a deal of some kind. I guess the question is where those deals land. Like, a case of like Vietnam, which thought it had a 10 to 15% tariff deal in place, is now sounds like, 20% caught them by surprise. Now, again, who knows if 20% will be the final number? We'll see. Um,
Yeah, I will say that the trade partners are also treating these more seriously than I think we are. A lot of
yeah,
the sort of net exports from, or the imports that we are receiving domestically are now funneling through these third party nations, right? Like China sends stuff to Mexico, we import it from Mexico, Thailand, Vietnam. So we are seeing external parties and trade partners taking steps to at least reroute orders in a way that tells me that they are actually concerned that tariffs might take effect. But I, I don't know. I feel like we shouldn't be having, not that you and I shouldn't be having this conversation, but that this conversation should not need to exist.
yeah,
It just shows a sort of fundamental misunderstanding of the effects of tariffs on an economy. That is frustrating, disappointing, but
yeah.
it is what it is, right? I don't.
And as we mentioned, the market is again coming into today all-time highs. It's been sort of flat in the last week. The real jump sort of happened, right before the fourth. Um, the VIX volatility is low. It's up a bit today, but we're in like the mid-teens, which signals there's not much volatility. Talked for months about how much uncertainty there is out there, but according to the VIX, there's not a whole lot, and I think maybe that is just investors getting a hold of, okay, here's what how we need to play the whole tariff thing, or how much or little we need to be afraid of the whole tariff thing. Sort of you know getting a grasp of investing in a tariff world, whereas they didn't know how to do that back in late March, early April. Um, and the expectation, I guess, that the Fed will start to cut rates here soon. Is maybe part of that. Um, and also just the economy remaining pretty resilient in the face of all this. All the data, while not, blowing people away, as we talked about, is good enough. It's been fine. And I think all that adds up to a market that's um, hasn't, soared. It's up 6% year to date, but on the heels of back-to-back 20% plus uh, gains in 23 and 24. It's sort of business as usual. And, what happened in April, March and April is no harm, no foul, it seems at this point.
Yeah, one of the places that I think that which we'll talk about a little bit later, is like the risk on sentiment, right? Like small caps have been doing really well.
Yeah.
For the last few weeks at least. I think year to date they're outperforming large caps at this point, and they're historically sort of a risk on good economic environment asset class, and they're outperforming now. Bitcoin risk on asset, it's at dollar denominated all-time highs. We'll talk about that shortly. Um, there's definitely some rotation. I know Mike has been
Hmm.
calling some of that out to his subscribers, where some of the growth names are getting a little bit toppy. No, I don't think as an asset class, but I think sort of selectively, where investors are probably looking around and saying, "Hey, Mag 7, these big tech growth stocks have been really been driving the market higher for a long time. Let's see who else is going to be sort of next to join the party." Because that's not to say that these big tech stocks are going down, but it's like how much upside do they have left in them? As I say, like I say that as Nvidia's up, I don't know, 10% this year or whatever the actual return is.
Four
I think it's
trillion dollar first $4 trillion company, right?
yeah,
Market cap company.
yeah, it's huge, and I think last I saw was trading around 166.
Yep.
So it's at all-time highs. Uh, but it's also, like you said earlier when we were talking about earnings, it is 100% priced for perfection, but it doesn't have to be the only name in town the way that maybe it had been the last couple of
Yeah.
years. So I think people are broadening out a little bit, which is ultimately good for the market as a whole. It just broadens the rally a little bit.
Yeah. I mean, I guess I didn't even realize just how well Nvidia had been doing since the beginning of April. Said now up 24% year to date, all-time highs. And that sort of speaks to, you knew exactly where Nvidia was a year or so ago when it was, dominating and carrying the market. Now it's just one of many. And growth has joined the fray in the last month plus, after underperforming for the first 5 months or so of the year. And Mag 7 as a group are only up about 1.5% year to date, but Nvidia still crushing it. So yeah, that speaks to the risk on market, but also that it's widespread now. This isn't just a Mag 7 dominated situation like we had a year or two ago.
Yeah, there's not the obvious play seems priced in, I think but the sentiment is still bullish. So it's
Yeah.
like, all right, well, we got to look at the next thing. There's other more speculative investment, like quantum stocks are doing well again. Flying car stocks are
Yeah.
doing well again. I
That's your
wouldn't be
baby,
stu
flying car stocks.
I wouldn't be stunned if we have like another meme stock period at some point this year. I debated trying to put that in one of the year predictions, but I wouldn't be stunned if we got another meme stock breakout of some sort. Um, because I think the sentiment is supportive of it. We're not quite there yet. I think retail investors are still a little bit hesitant, but I think we're gearing up for it.
Yeah. Well, that leads us to one other bull market tell, which you mentioned at the top, Bitcoin, at all-time highs. I think you said with a caveat, which I'll give you the floor for. It's now at 117,000, which is about 6,000 higher than previous highs from like June, May. It was like in the 111 area. So that speaks to a pretty frothy market. I'll give you the floor on Bitcoin though.
So the big caveat is that it's at all-time highs when you price it in dollars. It has not reclaimed all-time highs when you price it in other currencies like euros. So a big part of Bitcoin's outperformance has been dollar weakness. The US dollar is down more than 10% year to date against a basket of other currencies. If you look at the DXY, um, I don't it offers a dollar hedge without the sort of inconvenience of dealing with a real economy, right? Like Germany has been dealing with GDP growth slowdowns. I think they may be threatening a recession or on the verge of one if they're not in one already. So it's like, all right, if I want to go buy Swiss francs, well, as a dollar hedge, for instance, I'm not just contending with dollar weakness, I'm also contending with the possibility of Swiss weakness or other geopolitical events, other economic events. Bitcoin doesn't care about geopolitics. It can just be a straight dollar hedge. I don't think it's a good dollar hedge. I think there's still too much shady stuff that happens in crypto, especially with like Tether and some of these stable coins that have not yet been subject to audits, which can and is probably contributing to the Bitcoin price spike. But if you're looking for a dollar hedge and you want one that's eminently tradable at all times, it's a pretty good one right now.
Yeah.
Um, I don't know. Like I'm sure it'll hit 130, 140 this year. I don't have a I don't have like a really firm stance on it. This was another sort of also ran for our predictions, but right now it's made itself it's put itself very front and center as a dollar hedge that is disconnected from the economy as a whole. So as long as we're getting liquidity growth, Bitcoin's going to run up. But the fact that it hasn't hit new all-time highs relative to other currencies is a little bit of a tell for me that a big chunk of its strength is coming from dollar weakness.
Yeah. Well, that's a good take. It's a nuanced thing I hadn't really thought about. Yeah, and we've talked so much about how we view Bitcoin, I think a lot of people do, as purely a bull market play. Stocks at all-time highs, Bitcoin at all-time highs, that aligns. I think usually Bitcoin is the thing that breaks down first. So as long as Bitcoin is at these levels, you can feel pretty good about the market, I think. Even if there is sort of that asterisk, as you mentioned. Um,
There, there is also, I want to add one final item just because I hadn't brought it up. The president, his company is launching a crypto ETF that's going to own
yeah,
Bitcoin and Ether, which is a whole can of worms, but they're like the political machinery is sort of fully behind cryptocurrency right now. I think Texas said that they were going to start investing in Bitcoin. I don't love it. I mean, like, I don't love the idea of tax dollars being funneled into speculative cryptocurrency, but it is what it is. But that is, I think, definitely another catalyst as well. So when I say Bitcoin's running up because the dollar's weak, that's not the only reason. There's also institutional sponsorship that is happening behind the scenes that is a net positive for it, whether I like it or not.
and could also be a sign of a top, in Bitcoin, that kind of newsy item. Bitcoin, you see a lot about Bitcoin in the financial headlines, like, above the fold kind of stories. Now that in the past, that's sort of been right around, has sort of signaled a top for Bitcoin, but we'll see. Um, this first time that a presidential administration has gotten involved, so that makes it a little harder to predict. But okay, speaking of predictions, let's get to we each have three predictions for the second half of the year. Before we get to do that, I want to tell you everyone about our offer for today. We're offering Tyler London, who's on here with you a couple of weeks ago, his Cabot Early Opportunities investment advisory for 40% off the normal price, $597 for the year. If you go to cabotwealth.com/street, it's a monthly advisory. He has 5 new picks every month and sends out alerts pretty frequently about those picks. You get access to Tyler. He's good about responding to subscriber emails, free special reports, secrets to early stage stock profits. That's really what Cabot Early Opportunities, his other service is Cabot Small Cap. Confidential is strictly limited to small caps. This is not limited to small caps. It's, sometimes he's had in there Microsoft or I think he might have had you have Google at one point or maybe Netflix. Basically, he spotting sort of a turnaround in a major stock early. That's sort of like the early part of the opportunities. moniker here. So it's a great service, and again, we're offering it for 40% off the normal price. 30-day, 100% money back guarantee. So you can try it out for 30 days. If you don't like it, you get your money back. I don't think you'll want it back. And again, you go to cabotwealth.com/street to sign up now. Okay. Uh, let's get to our predictions. Second half of the year. I'm sure these will all be right. Um, we haven't heard each other's predictions, so there may be overlap here. I'm interested to hear, usually like the characters we lean into on the show is you're the pessimist, I'm the optimist. I think lately that's been flipping a little bit. I'm interested to see if it continues to flip here. I'll let you start off. What's your first prediction for the second half of 2025?
I think DoorDash is topped out. That is my first
Oh,
prediction.
very specific. Okay.
Yeah, all right. So in thinking about this, I don't want to skew too negative, because right, like I'm a parody now of an analyst where it's like I'm constantly a bear. Uh, but I also, I don't know, I guess that's sort of my bread and butter is picking apart stuff. Um, the reason that I'm bearish on DoorDash is it strikes me as a canary in the coal mine, I should
Mhm.
say, for what has been a white knuckle consumer, but is not necessarily a robust consumer. We were talking about resilient economy, like unemployment's still low, but continuing unemployment claims of longer than 6 months are at highs that they last reached in November of 21. Um, it's companies are not hiring. They're not getting rid of employees like hand over fist, but they're not really hiring either. Even the Fed Chair Jerome Powell acknowledged as much. The thing that stood out to me, Domino's Pizza in their earnings call in April uh, pointed to higher pickup and takeout rates versus delivery rates as sort of an early indicator that consumers were looking to save money. And one of the easiest and sort of fastest ways to save money on a day-to-day basis is cutting out those deliveries.
Yeah.
The
I've heard,
thing
yeah,
about
here in rural-ish Vermont, like our friends, I didn't even realize DoorDash delivered to our area. And some friends do it, and they're like, every time they do it, they're like, yeah, but it's really expensive. So like when we've talked about doing it, we're like, we'll just drive to Panera ourselves 20 minutes away and get it. Anyway, yeah, that speaks to what you're talking about.
yeah, yeah, you're exactly right. It's a convenience. It's a premium that you pay for convenience. Uh, we also know that high net worth households have been carrying a lot of the load for spend, right? Like the top 20% of households are responsible for 50% of the spending, or maybe it's top 10%. That's something we've talked about on this podcast before, but I don't have those numbers readily available. Um, those households probably have no incentive to stop spending, right? The stock market's at all-time highs, real estate values are holding up. They're still feeling good, but they're also not the ones that are door dashing Taco Bell for the most part.
Yeah.
Uh, so if we do see weakening consumer, especially if tariffs kick in, right? I can't cut my household necessities. I need the same amount of toilet paper, whether it's $3 a roll or $4 a roll. I need the same amount of toothpaste, right? Like I can't cut those expenses. I can't avoid the tariffs on that. I'm entirely at the whim of the producers and the stores that are selling it to me. The one place that I can start cutting expenses is discretionary spending, and DoorDash is a company that benefits entirely and exclusively from discretionary spending. Nobody has to get Taco Bell delivered. So I think they're a canary in the coal mine. I I think their share price is gonna start suffering because of it.
It's a good take. Yeah, I may or may not own DoorDash in one of my two investment advisories. Been good, up 42% year to date, more than that in the last year or so. Earnings out August 6th. So yeah, I'm gonna keep a close eye on that one. I'm glad you flagged it. Okay, my first one is much more sort of macro or big picture. I think the S&P will be down in the second half of the year. I don't think it'll be way down. But as we talked about, it's all-time highs now, all-time highs ish. Just below 6,300 currently. I think we sat here a few months ago, maybe only like 2 months ago, and every the consensus among Wall Street was, oh, the market will be flat the rest of the year, 5,900 to 6,000 area. That was consensus, and then went up, and now everyone's more bullish. I think there's a lot of factors working here. One, I mentioned earnings, acting maybe more as foe than friend this time around. Um, Two, while the VIX isn't showing it, there are still a lot of things up in the air, um, between tariffs, between geopolitical conflicts happening, and just sort of general economic uncertainty that still sort of threaten to derail things. Any one of them could threaten to derail things at any time, especially with the market sort of priced for perfection right now. And then there's one I keep coming back to that Cliff Droke, our colleague who's been on the show a few times, runs Cabot Turnaround Letter, has written gold prices and stocks never stay this high in tandem for very long. One of them has to give. And he didn't say which one he thought that would mean. I think he was even hinting that, maybe gold would have to retreat. Well, it hasn't. Gold is still close to, people are still not flocking to gold the way they were first few months of the year, but they aren't selling gold. It's at 33.76 an ounce right now. The high was 34.11. Or no, sorry, 34.31 month ago. Um, it doesn't seem like people, you would think that if everyone felt just great about the economy of the world, everything right now, that gold would really have sort of retreated. By the way, silver is also, that's sort of in a different category, but now at all-time highs above $38 an ounce. I don't think gold is going to be the thing that bends. I think it'll be the market. And I could see the market, do I think that we're in for, the end of the bull market in the second half of the year? No. Do I think we could get 5-10% correction? Yes, I think that could happen in the next couple months, or maybe when Wall Street returns from vacation, early September. September, October are usually tough months for the market. I could see another October bottom, like we've had a lot lately, and then sort of a rally towards the end of the year. If I were to give a price target on the S&P, see 62 right now, 61.50.
Yeah.
I don't know. That's my, so many times we've sat here and everyone's been so bullish, including all of our analysts, and then that immediately flips, and vice versa. I just think that there are too many things, even though the market keeps handling it, there are too many things threatening to derail. It's not a freight train, but sort of a slow moving, those things that in the old Disney cartoons that trails the train. What is that thing? Um,
I
Mickey
don't know
Mouse.
what those are called. I know
What
what
are
you're
those
talking
called?
about.
Yeah, they haven't been
Uh,
around forever, I don't think. But um,
Something Jack, probably.
yeah. Anyway, keeps plugging ahead like that. I like one of those. And I think we're due for some sort of correction that will make it difficult to go much higher than this back half of the year.
Yeah, one data point in favor of that is the Buffett indicator, Wilshire 5,000 to GDP ratio is at all-time highs. So
Mhm.
equity values are sort of historically high relative to what we are actually producing and outputting. PE ratios are as high as they were in 2021, and then in the pandemic sell-off when like right when the stock prices cratered before earnings had adjusted lower. So yeah, the market values are super elevated. The My only counterpoint to it is if the dollar keeps weakening, global equities are a hedge, even US equities are a hedge, right? Because if you look at dollar adjusted, the S&P and the Nasdaq are effectively down so far this year,
Hmm.
because dollar loses 10%, markets go up 7%, your net position is sort of a decline in 3% of
Yeah.
actual value. So if the Fed cuts rates, that makes bonds less appealing, it makes cash less appealing, probably promotes inflation. If we get an inflationary environment again, that's good for equities. I think that I think you're probably right. Like I wish you weren't, but I do think you're probably right that the market struggles higher. I did see some interesting commentary that the market seems to be very much mirroring the late 90s, the Nasdaq specifically, which from 2022, if you line that up with 1995, um, apparently it's almost like tick for tick matching the performance, which would still put a couple more years in the bull market.
Yeah.
Um, I don't love any kind of comparison to the dot-com bubble,
No.
but the Wilshire indicator and PEs are certainly in bubble-ish territory. Um,
Yeah.
all right,
Yeah.
I'm
Like
gonna.
I said, I thought, it seems like we've shifted where I'm becoming the more pessimistic one, but I'll see what your next take is.
My next one is not really sentiment specific. Did you see the MP Materials news? S-
Didn't.
So
No.
MP is a rare earth provider.
Yeah.
They're like the only domestic rare earth provider. They were up, I think, 40%, maybe 50% on a day after the
Yeah.
Pentagon announced that it was doing a $400 million preferred stock buy. So the federal government has taken a profit-seeking position in a private company. I've been trying to look into this, and my recollection of it is the only time that this has happened in the past has been in the case of bailouts. So we saw it a lot in like '08 and '09 where government was taking positions in banks as a means of bailing them out. We saw them take a position in General Motors as well. And in past instances when this has happened, it's always been sort of a bailout provision. It's like we give you equity, you pay us a little bit. We're not really looking to make a profit from it. This time, the Pentagon, it's not a bailout. It is a price floor through the Defense Production Act for rare earth prices, so that it makes them competitive with China, right? It prevents China from flooding the market with rare earths in the
Yeah.
event that we don't impose tariffs or just to make U.S. companies more competitive. But as part of that, it also made a $400 million investment in MP Materials stock spiked higher. I don't think this is the last we're going to see of this. Um, the president has made it very clear he wants something akin to a sovereign wealth fund that probably takes an act of Congress and probably takes a lot of deal making, but something like this where they're using the Defense Production Act and presumably something of a, you know, petty cash budget out of the Pentagon. I do think we see this again, and I'm specifically looking at uranium.
Hmm.
There's something called the Sapporo 5. So in 2023, it was the US, Canada, Japan, France, and the UK. They all came together. They made a $4.2 billion commitment to support uranium enrichment. Of those countries, we have 35% tariffs on Canada threatened. We have 20% tariffs on Japan threatened. We have unknown tariffs on France and the EU threatened. We have a 10% tariff on everything from the UK. So in-housing uranium is the next logical step, right? We're already showing that we're looking to take sort of America first positions with trade. I think we see a stock buy by the Pentagon, by the federal government of uranium producers next. It's similar sort of structurally to the rare earths production in that it's pretty limited capacity. Um, the the two names that stand out, CCJ, it's Cameco,
Yeah.
but there are a Canadian headquartered company that owns a U.S. subsidiary. The other one is UUU. It is, oh, I'm drawing a blank on the name of the company right now. It's what energy
It's
you
universal safety product.
for use. Sorry.
Oh, for use.
Yeah.
Um, I don't have that. Oh yeah, sorry.
All right.
Energy Fuels Inc.
Yes. Energy Fuels Inc. Thank you. Sorry about that. So they own White Mesa Mill in Utah. It's the only conventional uranium mill in the U.S. It provides 24% of uh, uranium to the country. They also have the Sweetwater plant in Wyoming, which is semi-operational. It's sort of on hiatus. I wouldn't be stunned if we see another deal like this. And that's the sort of, I mean, this is totally speculative. I don't have anything that tells me definitively this is going to happen. It's just sort of part and parcel of how business is being done and some of the things that have been expressed by the president. So I wouldn't be surprised to see the U.S. as a beneficial owner of some uranium producers this year.
So that's your take prediction that will there'll be a U.S. government takeover with a uranium that affects one of the uranium
Predict
specs you mentioned.
U.S. government for-profit investment in a uranium company. And the one I'm looking at specifically is UUUU.
Okay. Just writing all this down, for end of year hot sauce purposes. Okay. Good take. My next one, this is pretty lukewarm, but no prediction episode can go by without one of us, saying how many rate cuts we think they're going to be through the end of the year by the Fed, since we've been sort of Fed whisperers in the past, most of the time. I say two rate cuts, which is what the majority of people think. They're right now Fed Watch tool, CME Group's Fed Watch tool, 43% think that there'll be two 25 basis point cuts between now and the end of the year. That's the highest number. Now there are 29% of people who think there'll be more than two rate cuts, and also 23%. Actually, sorry, 27% who think there'll be either zero or just one the rest of the year. Yeah, I think President Trump has said he wanted there, obviously he's been putting pressure on Powell and the Fed to cut quicker. I think he wanted a full percentage point by year end or something like that. They've shown that they're not going to cave to that. But it does seem like they will probably start to cut rates in the back half of the year. I think two. And I guess that sort of goes as part of my market being flat to slightly down the rest of the year. That's not going to excite people. It's not going to disappoint people. The two rate cuts are probably just baked in, and when they start to cut, I don't think there'll be some rush to stocks when that happens. I think it'll just be expected.
Yeah, Powell came out and said, absent the tariffs, we probably would have started cutting already. I think that's certainly a point in the favor of cuts
Yeah,
coming sooner rather than later. But then it gets back to, well, how serious is the Fed taking Trump's tariff threats?
yeah,
Right? I mean, like, it's easy to say when you're in that 90-day pause and it seems like we're just getting universal 10% tariffs. Oh, we would have, had we had more clarity, we would have started cutting already. But then the first sort of major tariff news after that is we hit the expiration of that 90-day deadline, and now there's threats of higher tariffs. So if the Fed is taking that seriously and they've got higher tariff rates hanging over their heads, I would think they keep sort of playing with house money and hold off on making cuts, or at least I would think that would be a motivator for them. Um, yeah, I don't like if you have to bet on it, two feels like about the right number.
yeah.
I'm not fully in the one or fewer camp, but I guess It all just depends on, well, I mean, the next tariff deadline is after their July meeting. There's nothing to stop them from cutting once in July and then sort of planning for maybe a September cut. But there's also no reason for them to make the cut in July ahead of the next tariff deadline and not think, well, we can just cut in September and December. Um,
Yeah.
I think you're right. Like you said, it's not like the sexiest pick, but I do think that you're probably about right for those
Yeah.
numbers.
Why I didn't put it in the defend the take because it's not the hottest take, but it's just my prediction. That's all I need to make. By the way, you're getting a little choppier if you have any more windows to close. What's the other world in Stranger Things? What's that called? It's like you're coming
The
to us
upside
from
down.
the upside down. Yeah, that seems like that's where you're coming from. Um, all right, but we can hear you fine. So let's get to your third and final second half prediction.
Circle CRCL to double digits before the end of the year. Um,
Up.
they are no to price to price to double digits. They
Okay.
were trading around 200 the close yesterday. They were around a buck 86, 186 last I saw before coming into this podcast. Price gets back down to the double digits. They make money on a spread. Um, the assuming all the stablecoin bills get passed, there's nothing that makes them like a preferred stablecoin vendor other than their agreement with Coinbase. But if the Fed's cutting rates, then their spread declines. They don't really have anything. They don't have a benefit other than being sort of first to market with it. I don't see them holding these share prices. There's no reason for them to. There's nothing that they do that gives them an advantage if we see widespread stablecoin adoption. And they've been riding a hype train, and that train derails a little bit.
Okay. Yeah, interesting take. I don't know a ton about circles, so I don't have any notes. I do like the dichotomy here of you having stock specific takes, and mine are all Tyler-ish, macro, high level takes, including my last one here. Um, Value will outperform growth back half of the year. This was the case through the first, I don't know, 4 or 5 months this year. Value, not by a wide margin, but was outperforming growth. Now, growth is hit the accelerator in the last month and a half or so and is now outperforming value for the year. The IBD 50 index that Mike likes to cite a lot is basically the 50 best growth stocks according to Investors Business Daily. Up a little over 9% year to date versus values up around 6%. I think so, as Cliff pointed out in his issue today, Cabot turnaround letter issue today, there's sort of a haves and a have-nots in the market right now. There are several sectors that at their highest that are at or near all-time highs. That includes growthy sectors like information technology, communication services, and then some non-growthy like utilities and financials. That are close to all-time highs. And then, things like retail, energy, um, and consumer, I mentioned consumer discretionary, but consumer staples also are fairly below all-time highs. And that's where he was identifying spaces for turnarounds. And turnarounds is sort of, code for value stocks. I think rotation will sort of continue through the end of the year, and it'll rotate to the more unloved sectors. A lot of those are value stocks, and I think I could see value stocks. I can see growth being up, in the 7 to 8% range this year. Close to where it is now, and value being up maybe 10% for the year. So nothing dramatic, but I think the pendulum might swing back towards value as the market maybe sputters a bit and rotation continues to rotate to other sectors.
It's a weirdly role reversal episode for us, I
Yeah,
think.
that's why I said at the top. I think that We switched places the last month or so.
Yeah. Yeah. I mean, I think the rotation that we have seen um certainly leans in favor of that last take.
Yeah.
Um
Healthcare, another one I didn't mention that's pretty beaten down. I could see that getting some love the back half of the year because people always
well
need it.
the Yeah, one of the big risks for big pharma companies is implementation of said it before tariffs. Right, supposedly they're facing a threat of 200% tariffs, but I do believe the president said that he would give these companies somewhere in the neighborhood of a year, year and a half. Um, that sort of aligns with Medicaid cuts coming after the midterms. So that that external threat is not going to arrive for another year plus for healthcare companies. So if they've been beaten down in anticipation of these cuts and in an immediate reaction to the news, I could certainly see them getting bought back up again as news is sort of better than feared.
Yeah. Um, okay. Well, we've gone on long enough. We made up for lost time last week, and you're little more than a blurry paused head at this point. Actually, it looks a little better right now. Um, so I think that's a podcast.
All right. Yeah, my wife I wasn't sure if we were going to cut there or if we were going to keep going.
No, no,
Yeah.
no. That would be sort of a sad place to cut. Yeah,
But
we will. It's good to be back. It's good to talk market with you again. We will be back next week, and hopefully in HD.
yeah, I'll be back in high definition. My wife is off her meeting, so
Perfect. Actually, I can tell it just got a little better. All
yeah.
right. Thanks for joining. As always, like and subscribe. 5-star rating. Anything that helps us out. And we will see you again next week.